Welcome back to my channel, guys. This is JB Forex here, and this is going to be the next video under the complete Forex trading course series I'm planning on dishing out for you guys completely for free. Like, I'm not charging you one naira. This is the same like mentorship online course. People are charging 300,000, 400,000, 500,000, or close to 1 million naira just for you to learn. And I want to teach you guys everything completely for free, and all this knowledge here are something that I have paid for. Those are premium knowledge I got from mentorship programs. And again, if you're new to the channel, just go ahead and subscribe, turn on that bell icon, give your boy a sub, give your boy a like for sharing massive value like this for you. Straight to the point, let's go. You know, anytime I vibe, it's a banger, right? A bibi or nana. Now listen, what are we going to be doing in this video, this particular video? I want to show you, or we want to talk about the good currency pairs, the major currency pairs you should be trading. I believe by now you already know how to navigate the TradingView interface. You already have an account on Deriv broker. You already have an account on synthetic XNext broker. And again, you already have an account on Deriv broker. I've showed you how to create an account, install it on your MT5. Now this is deriv.com. If you want to trade synthetic, now there is a way people are saying you can link Deriv indices on TradingView, but I have not really like successfully done that. But if I successfully find out a way of linking Deriv indices to TradingView, I will still let you guys know. But for now, anytime you want to analyze currency pairs like GBP USD, GBP JPY, gold, other stuff, please do that on TradingView. But if you want to analyze synthetic indices, come to chat.deriv.com. You can see the link there. This is where you get all the TradingView, because if you go to the search bar and under the indices you type on VIX, you will see that you cannot see the volatility indices like boom and crash, but all you'll be seeing are other unfamiliar pairs on this site. But if you go to the Deriv indices and you search for VIX and you go to, oh, let's see. Okay, this is volatility. You don't need to search for VIX, you search for vol. Is it vol or volume or vol or vols? Something like that. I don't know why the shortcut key is not working. I don't know why the shortcut key is not working. I believe they did not include the shortcut. Okay, these are the shortcut key. Arrow underscore 10, arrow underscore 25. But obviously, when you want to trade volatility 25, this is where you come. Now, let's start with the currency pair. What kind of currency do you have to trade? We're going to talk about the currency pair. We're going to talk about the lot size and how to calculate your pips. Now, there are some things I will not teach you. I will never teach you because I did not learn it. And that thing, because it is not necessary for you to know it. What is that? Things like how to calculate pips. What is I'm sorry, I said how to calculate pips. What is a pip? How pip work? What is a pipette? All these kind of things, you don't necessarily need it. You can still learn how to calculate pips. It's not bad. But me, I don't know how to calculate pips. I just use calculator. When I want to calculate, I use baby pips calculator for my currency pair. I use a new site for synthetic indices. So you learning how pips work doesn't really add up to your knowledge, because pip is just the number of the price, is just the number that is adding up with the number that is adding up to the number that makes a pip. You don't really need it. What business you have as a forex trader is to have the ability to analyze the market, know when to buy and when to sell. Period. You make money or you lose money. That's all. Know how to analyze the market, know when to buy or sell, whether you are using trend line, break and retest, Fibonacci, demand and supply. Just know how to analyze the market, know when to buy and sell, and you don't. You make money or you lose money. That's all. Now, before we dive in, you already know how to navigate your chart. This is the interface where you add your, what's it called, your list. Now, if I click on this plus icon, now you need to go to the Forex section because I was on indices and all this. Now, if you take a look at this, you will see FXCM, you see FSCM, you see Oanda, you see FSCM, you see capital.com, you see sometimes you ask yourself, what's the difference? I'm seeing USD JPY, I'm still seeing USD JPY. Don't panic. All these names you are seeing here are markets. Now let me go to crypto. You'll be familiar. You will see Binance, you will see Bitstamp, you see Coinbase, you see Binance, you see Index, you see Binance, you see Bybit, you see crypto. This means that sometimes this is it. BTC USD, BTC USD, BTC USD, BTC USD. Now all this currency, different market you are seeing here. Binance is a market. Bybit is a market. Now, Bybit are on TradingView offering BTC USD. Binance are on TradingView offering BTC USD. Same thing with Forex. FXCM are on TradingView offering Euro USD. FX are on TradingView offering GBP USD. Oanda are on TradingView offering Euro USD. Same thing. Now you just need to like pick the market you want to analyze, because if you analyze on Oanda, your analysis will know. I don't think your analysis will be visible when you want to analyze that same currency on another market. But basically, me, I love to use Oanda all the time. So sometimes I just go to the all section, then I type Oanda. I just type Oanda, then I select it. So what this is do is it will fish out all the currency that Oanda is listing. Now you can see all the currency. Now, which currency do you focus on? First of all, let's start with the one that you will never focus on. That is don't trade pair like USD, NGN. Okay, I don't even think you can see Oanda is not even offering it, because that's not even a currency itself. This is it. USD NGN. This one safe no be currency now. USD NGN. Look. What's this? What is this? You cannot even see the chart. But if I go to the daily time frame, like you'll be seeing like small movement. This one is not chart now. You don't analyze chart like this. Nigeria is sorry to say, is like on like, I don't want to use bad statement, but Nigeria is not a currency. Nigeria currency is not a currency. Naira is not a currency. This is the chart. Now, currency like this, you don't trade them. The kind of currency you trade, let me go back to Oanda. So let me search for Oanda. The kind of currency you trade, let me select Oanda. Oanda, this is it here. Okay, let me get rid of this here. Now, the kind of currency you're supposed to trade is Euro USD. It's a good one. GBP JPY is a good one. GBP USD is a good one. Now, all the like pairs with GBP JPY or JPY are sometimes good. Now, you can trade USD JPY, USD CAD, AUD USD, USD CHF. USD CHF. I don't necessarily trade GBP CHF, Euro AUD, NZD CHF. Where is NZD CHF? Euro JPY is also a good one. Now, all you need to do now, listen. I am not telling you to have bunch of lists. Go and backtest, right? List them out and start backtesting on the pair that is respecting your strategy the most. That is how I do my stuff. What I do is I come here, I list bunch of them on my playlist here, my watch list. Where is NZD CHF, NZD, AUD USD, AUD NZD, Euro CHF, Euro CHF, NZD card. I'm looking for NZD CHF. NZD, look at it. NZD CHF. Now, all these other currency like Euro ZAR, you don't have to trade them. GBP HKD, you don't have to trade them. USD NOK, you don't have to trade them. USD PN, all these are currency you don't need to trade, right? Just leave them alone. Focus on the major one that gives you the best price action. So AUD CHF, let me just put that on my list. CHF JPY, put that on my list. Now, for now, I think we just have to work with this pair. Now, speaking of, these are the bunch of pairs. Now, you don't have to trade every single one of them. You just have to backtest it to see which one respect your strategy the most. Now, coming back to Deriv indices, the same thing. I only trade volatility pairs. Volatility 10, S, volatility 10. Volatility 25, volatility 25S, volatility 25. Volatility 50S, volatility 50. Volatility 75S, volatility 75. And volatility 100S and volatility 100. Those are the pairs that I trade the most. Sometimes, like on a very rare scenario, I do trade, where is it? Step index. I don't trade, sorry. Yes, step index, yes, step index. I don't trade boom and crash. This is it. I don't trade boom and I don't trade crash. I don't trade boom and crash. I don't trade job index, and that's all. I don't trade boom and crash. I don't trade job index. I don't trade what's it called, basket something something something. Now you just need to pick this. I'm not saying the strategy doesn't work on other currency or other pairs. I'm just saying I just want to pick the, you know, the pair that respect my strategy the most. Now you might ask, if you are a beginner, you will ask, what is the difference between volatility 10S and volatility 10? Volatility 25S and volatility 25. Now, volatility 10 is a different pair, while volatility 10S is a different pair. How do you know the difference between volatility 10 and volatility 10S? Volatility 10 doesn't have a bracket 1S. Anytime you see a bracket, like bracket 1S, it means that is the S on the currency you are trading. For example, this is on the daily time frame. This is volatility 25, volatility 10 index. We are basically on an uptrend, and market broke it. Now for trend line traders who say market has broke the trend line, so they are looking for sell. When the market now successfully retests this zone, they are going to sell down. But for me, as a demand and supply trader, I would say no. There is a demand zone here that have the possibility of pushing the market up to the sky. The only way I will consider this as a sell market is when market break and close, maybe retest the flip zone and sell, or probably retest one of the imbalances, which I'll be teaching you how to do and sell. Now don't forget, this is on the daily time frame. I'm just using this to give you the clear picture. Now the thing is this, another thing you need to keep in your mind, please, I've done this mistake several times. The lot size on currency pair is 10 times different from the lot size on synthetic indices. Now, on the currency pair, the minimum lot is 0.01. But when you are coming to TradingView from synthetic indices, 0.01 is not the lowest lot size. As a matter of fact, there is no unified lot size in synthetic indices. Like, for example, volatility 75, the lowest lot, minimum lot is 0.001. I think, yes, 0.001 is the minimum lot. Now, the standard lot on currency pair is 1. Bro, trust me, if you try one standard lot on volatility 25, your account will liquidate, especially if you have a small account like $100 to like 200, and market is just going like few pips against you, like a floating loss. Boom, the market has liquidated. So please, we're going to be talking about lot sizes. All right, we're going to be talking about lot sizes, but for now, we want to talk about the pairs that you should be focusing on. Now, these are the pairs. You need to do your back testing on it. Now, inside those pairs, I love trading Euro USD a lot. Looking at this on the daily time frame, I already know that this is a sell market, because why? On the daily time frame has given me a double top. The higher the time frame, the stronger the trend of the market. The higher time frame has given me a double top, which market want to sell down to this demand zone before looking for opportunity to buy up to this region. This is what I can see. No cap. I don't need to stress my eye. And I'll be showing you again how to do all this analysis. Very easy, straight to the point, using story. Because on the daily time frame, this was the recent break of structure that pushed the price up on the daily time frame. And again, I'll be showing you guys how to, add this shortcut key to your trading view so that when you're analyzing, it will be much more easier for you. This is the last break of structure to the upside, and market is like looking for way to more like, this is already a breakout, pullback and sell. Look for a way to consolidate, then buy up. This is what I can see as far as I can see. Now, I'm not saying this is what will happen 100%. No, I'm not saying that. I'm just saying this is what I can see as far as the market can give me. And this is a market structure shift. All right. Now, this on the daily time frame. Once you go lower, you start seeing opportunity to trade the market. So, Euro USD is something you need to add on your list. Now, GBP JPY, again, something you need to add on your list. But for now, GBP JPY is not giving me the best price action, despite the fact we had a long push to the downside. GBP JPY, GBP USD, boom, same thing. All right, GBP USD, same thing. Add this pair to your list. Now you can see on the daily time frame, USD, Euro USD has not completely filled this price action that I said this is a demand zone. But GBP USD has filled it. You can see this is a demand zone that have the possibility of pushing the price upward. If this market break and close this low, then structure has shifted on the daily time frame. You can see. But for now, we are not talking about analysis. I just want to show you. You need to add Euro USD on your list, add GBP USD on your list, add GBP JPY, this one, GBP JPY on your list, also add you can add USD JPY, because once you have a pair, a base pair like JPY or USD, the rest pairing with it will have similar price action. You can still add USD. Let me see USD card. USD card, you can still add it on your list. AUD USD. These are good price action. Euro USD, Euro AUD. I don't usually trade this, so I'll just remove it from my list. Euro JPY. This is a good one. You can add it on your list. AUD NZD. I don't usually trade this. Honestly, I don't usually trade this, so I'll just remove it from my list. You can see the way I'm doing it. Euro CHF. Euro CHF is not really giving me that vibe. So as if I want to, like, you can see I added an alert. Hey, English. Oh, hey. I added alert to the chart, but the market really doesn't really give me that vibe. So let me just remove it. You can see my list is now getting smaller. So CHF JPY, this one is no for me. No for me. AUD CHF, no for me. NZDC, all the CHF, I only trade like GBP JPY, NZD CHF and stuff like that. I don't think NZD card on the daily time frame. This is not a good price action for me. Euro JPY, this one is a good one because we have been buying. Then you can see from a long list, I am having a small list like 1, 2, 3, 4, 5, 6, 7 pairs that I can work with. Now, I can add gold. Gold, where's the almighty gold? For those of you that trade gold, almighty gold. XAU USD, almighty gold. I can add gold to my list. This is good. Let me add it to my watch list. XAU USD. Now, if you want to add anything to your watch list, remember to click this plus icon here. Remember to click it. Now, gold has been buying massively for a very long time. I'm looking for a retracement or a breakout on one thing or the other, because the momentum to push the price up is no longer there. And again, market chase price, you can see there is liquidity here, fair value gap, imbalance, fair value gap there, imbalance, liquidity. They are all the same concept, basically. And market is trying to fill it on the daily time frame. So there is more like market structure shift, major market structure shift that is going to push the market down. So this is, you can see, add gold to your list, and you just have to do your back testing. Here JPY, remove it so that we have now the smaller the watch list, the more focused you are on the market. All right, the smaller the word, don't have bunch of lists, and don't limit yourself to only one pair. Now imagine you are trading only gold and there's no opportunity. You will try to force the setup that is not set up for you to set up. One of my rules is this: do not force a setup. Now I said any setup that is not set up for you, do not force that setup to set up, else you will blow your account. I repeat, any setup that is not set up for you, do not force the setup to set up, else you will blow your account. Once you notice a market like this is not giving you that best price action, or probably you cannot like determine if the market is up or down, please just close your laptop, switch it off, or probably go to another pair and you look for opportunity to buy or sell. If you did not see opportunity, close the laptop. So now that is for the currency pair, that is for TradingView, those trading currency. Now let me speak to those my brothers trading synthetic indices. All right, I've told you, let me even show you, Seth. This is my watch list here. For now, I was trading 25. Let me see 25. I even had an analysis on 25. Let me see. Okay, I was not having analysis on 25, but I was having analysis on 50, volatility 50. Someone drew my attention when we were doing live stream. I think live stream on YouTube. That was my last video I did. This particular one here, someone drew my analysis to it, and this was it. We hit full take profit, and I noticed a flip zone around this region. When the market came and tapped that flip zone, I took a buy. The buy, I was targeting this up region here. I was targeting this up region and this second one, but this major one at the first place. Now, when I noticed market was pulling up aggressively, I knew the fact that we're going to hit the other take profit, and that is how this whole market was delivered. Now, the thing is this: Deriv indices or Deriv chart is no more. It's not like the TradingView whereby your chart is automatically saved. All right. Anything you do on Deriv indices, let's say I want to draw stuff here. I have to click on this save to save it, else you will lose your chart ASAP. Always click on save. Now, Deriv indices, if you are a trader who trade boom and crash, no problem. Focus on boom and crash. If you are a trader who trade step index, no problem. Focus on step index. If you're a trader who trade jump jump indices, no problem. But if you are a beginner, I would recommend you stick with the volatility pairs, because that is the only pairs that I trade on synthetic indices. Volatility 25, volatility 10, volatility 10x, all the 10 index. You can trade volatility 10x, but the day volatility 10x is not giving you that best price action. Let me go to the daily time frame. The day volatility 10x is not giving you that best price action. Please just leave it. Let's just assume that you are not getting the best price action for volatility 10x. Then go to volatility 10, because they are not the same price action. You can see volatility 10x was a downtrend and this is giving me an uptrend. They are not the same price action. They don't have the same lot sizes. You can see. And again, if you're still not comfortable with volatility 10s, you can go to volatility 50s to see if there's any good price action. If you're still not comfortable, because there are a lot of pairs you can trade, trust me, don't limit yourself to one pair. All right, so those are the pairs you need to put on your list. Now in the next video, we'll be talking more of how to analyze the market. Before we dive in how to analyze the market, there are things we need to talk about, like breaker block, order block, market structure shift, swing guys and swing low. But the goal here is to start gradually. We started from analyzing how to understand TradingView dashboard. We went ahead, I teach you how to create a verified Deriv account and log in into your MT4 account, MT5 account. And the next video, I went as far as teaching you how to create an XNES. Now, the reason I did this was because those are the two brokers I work with and I recommend. If you want to trade Deriv, you only trade indices. Don't trade currency pair on Deriv. Please don't trade currency pair of Deriv on Deriv. The entry price and the entry price on your MT5, both on Deriv, are not the same. Please, I know you encounter the spread is like tight, but the entry prices are not the same. You will lose a lot of money. And again, one thing I find weird when I'm trading currency pair on Deriv, let's say this is your entry price, and normally when the market crosses, let's say you want to buy and the market crosses your entry price with few pips like this, you are supposed to be in profit, right? Maybe with a candle closing like this, you are supposed to be in profit, but Deriv will not put you in profit. You're still going to be in loss. I don't know how, why, and I can't tell. So the best thing is this. That is the reason I told you how to create an account on Xnest. Xnest is not only the broker. There is Octa there. There is it FCMB or something, but Xnest is the one that I work with because it allows me to create multiple accounts. So anytime you want to trade currency pair like gold, currency pair like GBP USD, and so on, ensure you are trading that on Xnest. All right. But once you want to trade indices like boom and crash, TEP index, jump index, ensure you are trading that on Deriv indices. So the next video, which is this one, will be dropped now, and subsequently I'll be teaching you guys how to really understand the market, trade it, candlestick confirmation, chart patterns, demand and supply, Fibonacci settings, and every single thing completely for free. All I just want you guys to do now is to hit your boy a sub, give your boy a sub now, like this video, because once you like it, it tells the YouTube algorithm that this video is a good one. It's an educative video that will help people to understand forex market, and with that, the algorithm will help me to push the video to more viewers who are looking for ways to, trade the forex market, specifically for those who don't have the budget to get started. So this is all for this video. Don't forget to hit your boy sub, like, anytime I vibe, it's a banger, a BB. Oh nana. Cheers guys, see you in my next video.